US labor market shows quite strain as growth surges without jobs. The United States economy is once again sending mixed signals, underscoring a growing disconnect between headline growth and everyday labor realities. Fresh data released on Wednesday showed a modest uptick in weekly jobless claims, even as third quarter economic growth was revised higher, highlighting what economists increasingly describe as a jobless boom in the world's largest economy. According to the US Labor Department, initial applications for unemployment benefits rose by 1,000 to seasonally adjusted 2 lakhs for the week ending January 17. While the increase was marginal and below economists' expectation, it reinforced the view that the labor market has settled into a low hiring, low firing equilibrium rather than a dynamic expansion. Seasonal distortion around the early year-end holiday have complicated recent readings, but the underlying trend suggests stability rather than momentum. Employers appear reluctant to shed workers, yet equally hesitant to expand payrolls in a climate shaped by policy uncertainty and rapid technological change. The hesitation stands in the stark contrast to broader economic performance. Separate data from the Commerce Department showed that US gross domestic product expanded at a revised annualized rate of 4.4% in the third quarter, the strongest pace since late 2023. The upward revision was driven by stronger export and business investment, particularly in artificial intelligence, alongside a narrower trade deficit. Yet the growth has not translated into widespread hiring. Economists point to a structural shift in the US economy, where capital intensive investments and consumption by higher income households are powering expansion without generating proportional employment gains. Heather Long, chief economist at Navy Federal Credit Union, described the situation as an uneasy one where prosperity is visible at the top but elusive for much of the middle class. Policy has played a central role in shaping these dynamics. Economists say the aggressive trade and immigration stance of Donald Trump has simultaneously constrained labor supply and dampened demand while accelerating corporate investment in the automation and AI. Businesses uncertain about future trade costs and workforce availability have opted to invest in technology rather than people. The labor market data also coincided with the survey period for January's non-farm payrolls report. Job growth has already showed markedly, with payroll increasing just by 50,000 in December, broadly in the line with the subdued monthly average seen throughout 2025.